Hi, this is Lara at Elliott Wave Gold with your daily analysis for Tuesday, 21st of April, recording today's video just gone 5 p.m. Eastern Standard Time. The analysis recently, with 8 charts to prepare, is taking a lot longer than usual. Gold remains contained in that sideways consolidation phase. We have a small inside day. The consolidation phase began back on March 27th. We don't have a breakout yet. Since price entered a sideways chop, it is the down days which have strongest volume, and that's an indicator that eventually when the breakout comes it is more likely to be downward than upward. However, the Elliott wave picture remains remarkably unclear. If we see a new high above 1209.3, that will invalidate wave count 1. If we see a new low below 1184.04, that will invalidate wave counts 1, 2 and 3, leaving only wave count 4. At that stage we would have clarity. If we see a new high above 1224.35, that will invalidate wave counts 1 and 4, leaving both wave counts 2 and 3 valid. We wouldn't have clarity because one is bullish and the other is bearish. Let's have a look at the charts. I still have 4 wave counts. I'm going to consider all possibilities. I'm not going to try and pick a winner. We need to let price tell us which wave count is correct. When we have the breakout, then we will have clarity, I hope. At this stage, this wave counts 1 and 2 follow the bull weekly chart, wave counts 3 and 4 follow the bear weekly chart. Every day in the text article, I link back to a prior weekly chart where I show you the difference between the bull and bear wave counts. So because I have 8 charts to get through, I'm just going to focus on recent movement. The bull count expects a 5-wave structure up at intermediate degree. The targets remain the same. The first target is where it will reach equality in length with this upward wave. The second target is where it will reach 1.618, the length of this upward wave. It must be a 5-wave structure if it's a C wave or a third wave, because remember, an A wave can be either a 3 or a 5, so we could be labelling this ABC for a zigzag, or 1, 2, 3, 4, 5 for an impulse for primary A. So far, we have an impulse for minor 1, and minor 2 may or may not be over. Wave count 1 looks at minor 2 continuing sideways. If minor 2 is incomplete, it looks like it would be a combination. Combinations are reasonably common structures. Minor 2 would be a combination with a zigzag for the first structure in the double combination, labelled minute wave W. The combination is joined by a 3 in the opposite direction, labelled X, and here we would have a regular contracting triangle for the second structure in a double combination. A second wave can have a triangle as part of a combination, but you can't have a triangle as the sole corrective structure within a second wave. So for wave count 1, that's why I have the triangle beginning here. For this wave count, it expects actually quite a lot of choppy, overlapping sideways movement in an ever-decreasing range while this triangle comes to an end. Wave count number 1 then expects a breakout to the upside, only when the triangle is complete though. The triangle may be either a contracting or a barrier triangle. Let's look at how it's unfolding at the hourly chart level, where A down here is a slow down here. We have a zigzag up for B, a zigzag down for C incomplete, then we'd need another structure up for D, either a single or double zigzag, and a final structure down for E, either a single zigzag, double zigzag, or possibly even a triangle to complete a 9-wave triangle. Within this zigzag down for C, subminuet B may not move beyond the start of A above 1209.3. In the short term, that upper invalidation point for wave count 1 is black and white. Minuet C of the triangle may not move beyond the end of A below 1184.04 for both the contracting and barrier triangle type. For this wave count, when C is a complete zigzag, then D upward may not move beyond the end of B. For a contracting triangle, for a barrier triangle, it should end about the same level as B so long as the BD trend line of a barrier triangle remains flat. What that means in practice is D can end slightly beyond the end of B. Once we get into the D wave of this possible triangle, it could make a very slight new high above 1209.3. Once we get into the D wave of the triangle, this invalidation point is not black and white, and that is the only Elliott wave rule which has any grey area whatsoever. The final E wave of both the contracting and barrier triangle type may not move beyond the end of C, so wave count number 1 expects lots of choppy, overlapping sideways movement in an ever-decreasing range, probably for a few days yet. This is wave count number 2, also following the bull count from the weekly chart level, also expecting a 5-wave structure up at intermediate degree. Within this intermediate wave structure up, we have minor 1 and minor 2 may be complete here. So within this upward movement, we have 1, 2, 1, 2, 1, 2. We now expect to see 3, 4, 3, 4, 3, 4, 5 to complete a 5-wave impulse. There are a few problems with this idea though. This blue trend channel is a base channel drawn around minor waves 1 and 2. A lower degree second wave correction doesn't normally breach a base channel drawn around a first and second wave 1 or more degrees higher. Now base channels commonly work like that, but not always. The breach of the base channel does not invalidate the wave count, it just reduces its probability, and I am considering all possibilities. If minute 2 is over here, it is twice the duration of minor 2, 1 degree higher. That also is a reasonably substantial problem for this wave count. Minute 2 should be expected to be only about the same duration of a higher degree correction, not twice as long. Minuet 2 would probably be over here, so this green candle for Tuesday's upward day for this wave count should be the beginning of an upward breakout, so you would expect it to show an increase in volume. Now the first day of a new movement for gold doesn't always show an increase in volume, so that is an indicator that the wave count has a low probability, but it's not definitive, it could be resolved. If we see a strong upward day for Wednesday, and if it shows a strong increase in volume, particularly stronger volume than this downward day, then this wave count should be seriously considered. Minuet 2 may not move beyond the start of 1 below 1184.04. Let's look at this at the hourly chart level where this low is this point here. So here we have a 5-wave structure up for Minuet 1, a 335 flat correction down for Minuet 2. This wave count now would have a series of overlapping first and second waves, indicating a strong imminent increase in upward momentum. There's another possibility though. The second wave correction may not be over here. It certainly could continue further sideways as a double flat or double combination. If it does that, it can't move beyond the start of 1, below 1184.04. To allow for that possibility, I leave the invalidation point down here. That could explain all this choppy overlapping movement with a low volume for the up day. At 1304, minute wave 3, once it gets underway, should reach 1.618, the length of minute wave 1. This is wave count number 3. It follows on for the bear wave count at the weekly chart level. It looks at the possibility that cycle A and primary 5 within it are incomplete. At 957, primary 5 would reach equality in length with primary 1. Within primary 5, we have intermediate waves 1 and 2 complete, and intermediate wave 3 may have begun here with a long extended first wave for minor 1, and we may have an incomplete zigzag for minor 2. This wave count though sees minor wave 2 lasting a lot longer than a second wave correction within an impulse normally does last for gold. But the extra duration could be explained by the existence of a time-consuming triangle for the B wave within the zigzag of minor 2. Minor 2 would be most likely to end if price comes again to touch the upper edge of this maroon channel. This maroon trend line is the upper edge of a big wide channel I'm copying over from the weekly chart, with weekly and daily charts both on a semi-log scale. If cycle A is incomplete, then within it primary 5 should not be breaching the upper edge of a channel containing all of cycle wave A. The fact that it has been breached at the daily and weekly chart level is a strong warning that this wave count may be wrong. I do retain it though because it hasn't been invalidated by price action. It does still remain possible, and within intermediate waves 1 and 2 particularly, it has a perfect fit in terms of subdivisions with amazingly good Fibonacci ratios and relationships in time. It has a couple of problems now though. Within minor 1, minute 4 is more than 13 times the duration of minute 2, giving this downward movement a rather 3-wave look. I think this actually does fit better as a 3. So the situation is unclear. Both bull and bear wave counts have their problems. Both have points in their favour. Let's let price tell us which one is correct. Until then, we need to consider all possibilities. This wave count expects that a triangle for a B wave, a running contracting triangle, is very, very close to an end. I had expected it to end on Tuesday, but it's not done that. It still needs to complete the final zigzag down for the E wave. When the triangle is complete, this wave count expects a short upward breakout, possibly a false upward breakout. The final upward movement for minute C would be very likely to move at least slightly above the end of A, just below 1/200 to avoid a truncation, but it doesn't actually have to move beyond the end of the price territory of minute B. It could even end above this point but below this point. That could look like a short little false upward breakout. It could move slightly above this point and be a false upward breakout. After that, we could see the beginning of a third wave to the downside. The triangle idea here is supported by MACD hovering about 0 at the daily chart level. Very low volatility would be associated with a triangle, and a decline in volume toward the triangle's maturity is certainly supporting the idea of a triangle. Let's look at this at the hourly chart, where the low for minuet C is here. We have a zigzag up for D, a zigzag down for E, almost complete. Within it, subminuet B may not move beyond the end of A above 1209.3. In the very short term, while E is incomplete, this invalidation point for wave count 3 is black and white. E of a contracting triangle may not move beyond the end of C below 1184.04. In the short to mid-term, this invalidation point for wave count number 3 is absolutely black and white. This wave count expects a more choppy, overlapping sideways movement, but probably another red candlestick for Wednesday's session to complete the triangle, and when that's done, a short, sharp upward breakout to complete a zigzag for minor 2. When I know where minute B has ended, I can use the ratio between A and C to calculate a target for minor 2 to end for you. I can't do that yet because I don't know where C begins. The final E wave of a triangle most commonly ends with an undershoot of the AC trend line, but sometimes they end with an overshoot of the AC trend line. And this is the fourth wave count, also follows the bearish wave count, but instead of minor 2 continuing, it's more likely to be over as a single zigzag. This has a better proportion. The duration here of minor 2 is more typical for a duration of a minor degree correction within an impulse for gold. Third waves necessarily begin when they extend with a series of overlapping first and second waves. Here we have 1, 2 and now 1, 2. Minute 2 here is a very common double combination, flat correction X zigzag for minuet Y. Draw this base channel on the daily chart, copy it over really carefully to the hourly chart. From the start of 1 to the end of 2, draw the first trend line, place a parallel copy on the end of 1. It absolutely perfectly shows us where minuet 2 found strong resistance and ended. We have a small up day, another second wave correction showing itself at the daily chart level. If this wave count is correct, you absolutely would expect that small up day to show lower volume. This wave count is strongly supported by volume. It expects that the breakout is imminent, and the breakout is expected for this wave count to be downward, and that's supported by, within the sideways chop, it's the down days that have the strongest volume, and we have declining volume towards the maturity of this sideways chop. Let's look at this at the hourly chart level, where the low of X within the combination is this point here. So this is the end of the combination for minute wave 2, and here within minute 3 we have 1 and another deep second wave correction close to completion, subdividing as a double zigzag. I would have expected this one to more likely end at the 0.618 ratio, but it's going to be deeper than that. The structure of this upward correction is incomplete. We need a final little C wave up, most likely to move beyond the end of A, and for wave count 4 we may again see upward movement come to touch and end when it touches this blue trend line. Minuet 2 may not move beyond the start of 1 above 1209.3. At 1059, minor 3 in its entirety would reach equality in length with minor 1. Minor 1 was a long extension. This target expects that the third wave will also be a long extension. So this wave count expects the end of a second wave correction very, very close by. When it's done, this wave count expects the downward breakout to begin with some very strong downward movement. If we see a red candlestick for Wednesday, if it's strong, if it shows an increase in downward momentum and an increase in volume, this wave count would be strongly favoured. So we're going to have to let price, volume and momentum tell us which of those four possibilities is right. I'm still expecting it's more likely the breakout will be downward. If I had to pick a winner, I'd have to pick wave count 4, although it has enough problems at this stage for me to not have confidence in it. That's all for me today with your gold analysis. I hope all our members had a fabulous day.